fam, welcome to another episode of Good, Bad, and Ugly about real estate. I have a great guest for you today, a new friend of mine. Got Christian, and I didn't get set up. Sorry about that. Woo! Welcome to the show, Christian. How you doing, bud?
There we go. Welcome. Good to be here, man. Good to see you.
Thank you. I've been following your channel for a little bit and said, you know what? I got to have this guy on. I love what he's doing. I love all the nuggets you're dropping to the people that are watching your channel. So I'm hoping that you can do a little bit of that for me. You know, share a little bit of your knowledge and the people that are watching this, and also share a little bit of your journey. So can you tell everybody, you know, like what made you get into real estate, how you got started, and why you picked the niche that you have?
So I got into real estate. I've always been interested in real estate since as far back as I can remember. I liked the idea of like, hey, I can start an income stream that, while it's not completely passive, it's relatively passive, right? Regardless of my income or my inputs, rent should be coming in roughly every month for every tenant. You do have some work to do in real estate, but as businesses go, it's not a highly active business, and you can acquire them indefinitely. It's a good, safe way to utilize debt. So when I was looking at all the things that I can do and focus on and build, real estate seemed to be the surest way to buy rentals over the long haul, build wealth, end up in a really good financial place. So just on a basic level of, I believe humans will always need housing.
Right.
The supply and demand, it makes a lot of sense on an economic standpoint. Very easy business to understand. So no matter what I did in life, I always knew I wanted rentals. I actually started with the Dave Ramsey's method, which my father taught me and my school taught me and my mentor taught me, which was save, and buy rentals when you have enough money to buy them with limited debt or cash. So I got my first house. I got a duplex to help offset some of my rent. I worked for another several years. I bought a second duplex. 8 years into my career, I had a house, 2 duplexes that covered my mortgage completely. It took me 8 years to get my real estate to pay for my real estate. That's not paying for any of my lifestyle. It's just covering my cost of living. That's like the world's longest house hack. It's cool. It's a good place, right? Real estate's paying for your real estate. It's appreciating over time. It's a good place to be.
Right.
But that's nowhere near financial freedom. And I was looking at it, I'm like, man, do I really want to get 8 more years of work to build another $2,000 a month of income? Like, it wasn't inspiring to me. So I started looking into, how do I expand beyond the money I have? The next deal I bought was a 38-plex. I had $10,000 in my account when I bought it. We needed $300 down. It was seller financed, 15% down. That deal ended up appraising a year later for a little over $4 million.
Oh, wow.
That made me my first $1 million. By the time we actually got there, I had bought a 12-plex, a 7-plex, a 6-plex, and another 12-plex, all seller financed. That was my first year of playing with creative finance and what you can actually do with capital. I never raised money before. I didn't have any friends or family who had money. Every deal was put together from a seller I didn't know and investors that I didn't know before I found the deal. The deal always found the money, and that realization allowed me to continue to scale my portfolio to where I am today. I own in Washington. I own in Texas, where I've moved to. My portfolio allowed me to build my dream house here in Texas, which is where my wife and I live. I had my son here in Texas about 6 months ago, which is amazing. He's fantastic.
Awesome.
So we actually did build financial freedom from rentals, and it took about 4 years from figuring out the creative finance to be where I am today. About 150 rentals in Washington State, about 150 in Texas.
So help me understand this, because it seems like a very big jump from Dave Ramsey, save and pay everything in cash, to I can't live like this anymore. I don't want to wait 8 years. I'm going to take the next year and buy 4 different assets creatively. How did you make that jump? Like, did you educate yourself on creative, or did you just kind of figure it out as you went?
No, I got the right motivation. We had 2 things happen. I was a sales rep, outside sales. I'd worked really, really hard on the Dave Ramsey method to scale a scalable career. That's one of the kind of the main things, is work on your earned income. And I got that to a reasonable place.
Gotcha.
I won't get the strike against the channel by saying the word. The thing happened in 2019 and 2020, where outside sales looked a heck of a lot different for a few years. At the same
Sure.
time, my wife was a kindergarten teacher, so she was teaching kindergarten online, and
Okay.
she at a low-income school that was primarily refugees. So they
Okay.
don't speak English. A lot of them have multiple siblings, and now you have kindergartners learning on Zoom. That it didn't work at all. So
Right.
we had this great setup where I had a good earned income. She was enjoying teaching. Um, both of those changed dramatically. So I had time to sit at home and think, okay, what do I actually want to do? I was working in real estate at the time. I was working for the CoStar Group. So apartments.com, land.com, homes.com, the CoStar data. They're one of the biggest real estate related companies. I had,
Especially commercial. Yeah.
yeah, I was doing real estate related activities. I was not a real estate investor. It just took that little bit of break and that little bit, that was just enough pain to
Right.
actually look at what I was doing. I was like, I wanted to own a bunch of rentals. I sell data to people who own a bunch of rentals. I'm on the wrong side of the table. So I took that time just to go like, okay, who is buying rentals with limited cash? Two of my clients were actually at the time with CoStar were doing that. I drove down to Tacoma, Washington, met with one of them, took a job with them on the spot. He ended up being a terrible, terrible business person, by the way. He was just awful at business. Amazing at creative finance, though. He had bought 20 condos, $0 down right before 2008, lost all of them. Then he did the best seller financed office deal I've ever seen in my life. $2 million office. He bought for $1 million seller financed, 5% interest. Great, just amazing deal. Half priced and great interest.
Right.
Zero down. So he bought it. He just turned an idea and a pitch into an awesome office where he put all of his businesses, and he decided, I'm good at office now. Then he bought a $1 million office for $3 million seller financed and lost both offices because
Oh wow.
he was an idiot. I learned a lot about how not to do business, but what I did learn in that year that I spent there was I watched how the deals were structured, and I was like, I realized creative isn't really that creative. It's the real answer is, what is the least creative answer to buy a deal unconventionally? I need to know what I need. I need to know what the seller needs. The simplest answer in between there is always the right answer. And so I'll take that 38 unit. The first one I bought is a perfect example. No one had asked them, by the way. This thing was on market for 13 years at this price.
Oh wow.
They wanted to retire on $10,000 a month from this property. The property
Okay.
was failing. They were in their 80s. It was not bringing in $10,000 a month net to them. I needed cash flow. Now, if the property's bringing in less than 10,000 a month and they need 10,000 a month, most people would say, well, that doesn't really work. We just structured it in a way where we give them their down payment, which wipes out the debt they had. They had 200,000 of debt. We did 300 downs. They walked with $100,000.
Okay.
In 6 months, we have no payments. And the payments start at month 6 when I have time to get the rents up where I can service $10,000. Even better, we got 4% interest with just a custom amortized payment. So a lot of our payment was just principal pay down.
Oh
We got an
nice.
amazing debt product that pays itself off extremely quickly. The property buys the property. It was a stellar deal. But again, it's not this genius, crazy, like, wow, we did this amazing thing. We just went, okay, it could afford 10 if it was operating correctly. It doesn't
Right.
now. Simplest answer, buy time. How do we buy time? Well, it only works if we have literally no payments. We did no payments. That was the answer. So when I say creative is simple, it's just looking at, where am I? I need cash flow. Where are they? I need $10,000 a month.
Right.
How would we bridge this? By saying yes to both parties. That was the answer. Propose it. If you nail what they wanted and you got what you needed, you get a yes every time you close the deal. And that's been true. Almost every deal I've done creatively has looked something like that. Someone had a specific price where the deal didn't quite work, but we came up with terms that made it work. Or they had an interest rate that didn't quite cash flow, and we came up with a way to make it cash. It's just simple things like that.
So you said your first one was 38, which some people might think that's quite a bit to go from a duplex to a 38 unit. I know a little bit about multifamily. So do you have a property manager that manages that for you?
I do
Um,
today. I actually started the property management company. We self-managed, and I found it's quite easy to self-manage until you get to about 50 units, and then it gets a little bit. Then there's enough maintenance calls that come in where you're like, oh man, this is actually becoming a job. Uh,
right.
Less than 50 units, for some people, they kind of cap out around 30. when you're building a portfolio, it's very, very, very easy to manage very few units. I would say a 38 unit is maybe 3 times as hard as a duplex, though. It's not a linear, every unit equals the same amount of hard.
Sure.
All your tenants, yeah, in that particular campus, I had 4 roofs. So it was basically just running 4 buildings.
Nice.
It's not that much harder because you have, one septic system for everything. You have a main electrical line. You have 4 roofs, 38 units. You have 38 toilets, so you have the same amount of plumbing you'd have in a lot of buildings, but everything
Right.
else is shared utilities, shared parking. There's a lot of efficiencies when you go bigger. If you tried to scale to, what was that, 19 duplexes, that would be a lot harder to run as 38 units than just buying one 38 unit building.
Because
It's
they're
not
all in one
that much.
place.
It sounds a lot bigger than a duplex. It's actually not a lot more work than a duplex. It really isn't.
Gotcha. So, people watching this, they're like, well, yeah, he knows what he's doing, but they might want to know, how are you finding these deals?
So I've never asked anyone to sell a property. Still, I'm 4 years into buying real estate at about 100 doors a year, and I have never asked for a deal before. I go meet the people who own the properties in the market that I want to own the properties in. They've already built the business. There's no reason for me to try to build it from scratch. I go to them. I introduce myself. When I started, I had 2 duplexes. The second one was actually in Moses Lake, Washington,
Okay.
and I loved that market. I saw a lot of opportunity there. About 3.5 hours from my house over the pass. So it's not close, but it's technically in state. If you
Right.
were on the East Coast, 3-hour drive would be out of state. So it depends on which you're in, one of those tiny states, but not local to me, but in the same state. 3.5-hour drive over the mountains. Moses Lake, Washington. I own a duplex. I called the person across the street with a 20-unit building. Hey, trying to scale. My wife got injured at work. I'm trying to retire her. I realized I can't do this one duplex at a time. It's taken me a long time. I am your property neighbor. I have a property right down the street, and I spent my last dollar on it. They're usually like, okay, well, how can I help you? I'm not selling. I'm like, well, awesome. Like I mentioned, I couldn't buy it if I wanted to. I spent my last dollar in a duplex. What I am interested in is how you got to where you're at, because you're buying the types of buildings that I think I'm going to need to buy to scale at any sort of speed. What did your
Right.
journey look like when you were at the beginning? We have those conversations. I book a coffee meeting. We get to know each other. Now the owners in the market, you do one of those a weekend. The owners in that market, and there's not that many in most markets.
Right.
They all know, hey, this guy doesn't have a ton of cash. Hey, I remember this guy and he's trying to retire his wife. He's at that point of his business where he's realized, all the big owners have had this realization at some point. It's a lot easier to scale with larger multifamily. You don't need a 200 unit building, but a 38 plex gets you to your goals a lot faster than a duplex. There's a lot of things that they typically resonate with you on that. You have the conversations. They end up calling you a few months later. Hey, I got a buddy selling a building. I know you're a little light on cash. I think you'd hold a contract for you. This building's too small for me. I think this moves you forward. I get that type of call all the time.
And that's just from a coffee shop.
And it's just from you saw someone's property on Google Maps and you Googled, you go to the county assessor and you go, who owns it? You Google their name and the word phone number, and magically a phone number appears. If you
Right.
really want to cheat, there's sometimes like 5 phone numbers will appear. Majority of people have an iPhone. If you text it in your iPhone and it lights up blue, you're like, I got the real one. It's so easy to do, though. I'm not mass dialing people. I'm making maybe 2 calls a day, maybe
Okay.
5 days a week, 10 calls. I don't care if it's a voicemail or if it's if it's a voicemail, leave a quick message. Hey, it's Christian. Had a quick question
Yeah.
before you call me back. If not, they pick up the phone. Awesome. We have a conversation. You make 10 dials, one person will meet for coffee. 52 people a year get added to your relationship deck.
Yeah.
And at the same time, there's still deals that get listed. I rarely buy a listed property on LoopNet or Crexy. It's usually where deals go to die.
Right.
But the brokers who represent those properties, you have a great conversation with one of them. You have an intelligent conversation and come off like a real buyer.
Right.
They'll call you on the next deal. I get so many deals referred to me just because I call on a deal. I did this yesterday in Weatherford, Texas. There's a good looking deal, a little overpriced, but it's the type of stuff I love buying. I was like, hey, I own in Stephenville. I own in Mineral Wells. I own in every city around you. Haven't broken into Weatherford. Been trying for a year.
Right.
This listing is exactly like what I want to buy. We got to talking about the deal. I was like, I'm close on it. I don't think because they needed bank financing. I was like, I don't think a bank's going to go 75% LTV. I think your price is probably a little high for where it will appraise.
Yeah.
I would have to put down more than I want to. If they get any flexibility on price, we can touch base on it. What else are you working on here? Because Weatherford, hard to get listings in. Weatherford, Texas is a difficult one. You
Right.
have exactly what I'm looking for. You have anything else like this coming up? Turns out they do. And the person who they are going to be listing for, it's 72 units, and I already know the owner because I've met the
Nice.
owner. Guess who's probably going to get first shot at that deal? It's going to be me.
I
And
have
it's
no
not on
clue.
market yet, but I called it on market listing. Those are the two easiest ways. It's completely free. It takes very little time. And it's like you just pick up the phone. Brokers are the easiest ones on earth because they're paid to talk deals.
Right.
So you talk to them about a deal. It costs you nothing. It costs them
Right.
5 minutes of their time, and oftentimes they'll spin off a deal that's fantastic for you. That's been the secret to finding deals for me. I've never paid for a lead. I've never built a team. I've really never made more than 10 minutes of calls in a day. I just kind of passively I see a deal, I call on it, build a relationship. Now everyone in my markets knows who I am. You can do this in about 60 days in any market.
Gotcha. So, in most multifamilies, you have a due diligence period about 60, maybe 90 days, depending on how big the unit is.
Yep.
Is that the same way with the ones that you've been working with? And do you take the full time to find your investor, or how does that work?
Yeah, so the order is always deal debt equity. People get stuck on the money thing. This is that Dave Ramsey thing again. We went through school, we get programmed like this. It doesn't matter if you have the money, you need the opportunity. If I'm like, hey, I can place $100,000 at 8%, I'm only looking at deals that I can buy 100 down and they have to cash flow more than 8% to like my
Right.
limited pool of deals. If you're feeling like you never find a good deal, it's because you're limiting your buy box is way too small. You're limited by the money.
Right.
I look at, okay, what do I actually want? I love entry level and mid level multifamily. I don't really like luxury rentals. I have some, they don't do anything for me. I really do like providing excellent housing in areas where it's needed. And economically, I think it's a more stable investment either way. So I'm like,
Right.
okay, I'm looking for entry level housing, multifamily, 5 to 99 units.
Okay.
Once you get 100 more, you're competing with a bunch of institutional. You lose some efficiencies over 100 units. The
Right.
sweet spot for me is anything commercial under 100. That opens up a lot of opportunity. So now all I have to do is meet all of the brokers, all of the owners in the markets that I love investing in, who own those assets or who list those assets. Again, that takes like 60 days. Everything from there, that's all the deal flow you could ever need. I have more deals in my pipeline than I can even manage trying to raise for. I'm closing to 76 right now. Beautiful property, almost done with that capital raise. The same seller is selling me an 86 unit in Waco, Texas, right afterwards. And the owner I bought my last 44 unit wants to sell me their 72 unit up in Mineral. Like there's so many deals. My pipeline's pretty much set for the year. And
Yeah.
I just moved to Texas. It's not like I had all these long-standing relationships down here. You could drop me in any market in the country. It's just so easy to do, and it costs you coffee. I'm a highly
Right.
caffeinated individual, but outside of that, it's a great deal.
That's awesome, man. We're gonna talk after this podcast. I might be able to help you to fund some of those. We can partner and collaborate.
No, always love to do that. Always love to do that. Having a lot of fun with because I do so much entry level housing. I have years and years and years of experience with Section 8 multifamily. About 20% of my portfolio has some amount of Section 8.
Nice.
I absolutely love it. We started getting into LIHTC, which is Section 42. It's rent restricted properties.
Okay.
So essentially, think of it kind of like Section 8, but it's the developer gets huge tax credits.
Okay.
You build the building. In exchange, you get a land use restriction. They're usually for like 30 years. There's 15 years of compliance, 15 years of extension. There's
Okay.
actually a way to pull them out of the extension period so you can just bring them to market.
Right.
But I have found some opportunities there. It's hard to get qualified. I've done with the state. I've done so many of these now. We know what the process is. I've been knocking those out all over Texas. I just buy them where they cash flow beautifully and we hold them.
Okay.
That has been a fun little niche because it's so hard to get qualified It's one of those deals where they really only like working with people who already work with them. It's kind of like trying to get a first job, and they're like, we need 3 years of job experience.
Right.
Once you're in, it's like, oh my gosh, no one else is doing this. That's been a real sweet spot in Texas where we're still getting great numbers, we're doing great deals, but it's properties that just have a hard time trading because they have those restrictions and most people don't qualify for them.
Sure.
That's been a huge, huge, huge deal flow for me.
And is that niche just in Texas, or is that in other markets as well?
Oh, that is national.
Okay.
Every state has its own qualifying process. This
Sure.
state and federal laws over it, but in Texas, it's the Texas Department of Housing and Community Affairs, TDHCA. They take like 60 days to work with. After you have all of your LLC and structure and due diligence done, they
Right.
take like 120 days to close, which makes
Okay.
for a very leisurely capital raise.
Absolutely.
You can go under contract and you're like, oh, it's going to be like half a year before you even attempt to close this. This is going to be great.
Well, talking with you, I mean, it sounds like you're, I don't want to say a solopreneur, but I mean, you don't have a really big team. Do you, when you're finding these investors that are willing to invest in the acquisition that you're working on, do you bring them in as a JV partner, or do you leave them as a private money lender? How does that usually work?
So it's going to depend on the deal. If you have a really high, less people is less variable. So the least
Right.
people, least amount of people you can introduce to your deal. You always use fixed rate debt. So you fix your debt. The best you can fix your people is have less humans on every deal. It's much, much, much simpler. So almost every time we'll do a JV, if you can knock it out 100% debt, that's a really high cash flow day one deal. The
Right.
rules of the game for me is it needs the cash flow day one. So the day I close to forever, I am paid. My income goes up every time I close. That is my underwriting rule. So if I can do that, I'll buy a deal. I bought a mobile home park. Well, actually, it's an RV park near my resort in Washington. I bought that for $300,000, 28 units. I
Okay.
bought it 200% financed with hard money. It cash flowed beautifully day one. I had like
Wow.
a 30% cash on cash return and I borrowed at 13.5% interest. If that sounds insanely high, it is, but that cash flow was, I mean, it's a ridiculous deal. That makes
Yeah.
sense. All debt. That's deal debt done. No equity at all. If you need, because most deals don't do that. If you need to bring in a down payment or you need to bring in an equity partner, then I try to do that as a JV as often as possible. On the 76 unit, it's about a $2 million raise. I opened that one up as a syndication, but here's the three different structures that I utilize. If it has enough cash flow to service 100% debt comfortably with margin, always the answer, do that. If you need an equity partner, it's less than 5 total people in the LLC, JV every time. It is so simple. The paperwork is easy. And I put out a buyout agreement for every partner. Eventually, I do want to own the real estate. So I
Right.
do deals that have enough equity upside to when we refinance, we can give a multiple of their money, buy them out. I end up with the real estate. They all multiply their money and get to ride along with me. The syndication is when you have more than 5 people. I had a bunch of people who wanted to put 250 into a deal. If you're raising $2 million, that's too many people on an LLC to make any IRS argument that everyone is an active member. It's just not feasible. Syndication has been, it used to be branded as like, oh, this is a magic way to buy deals with none of your own money. And then a whole bunch of people got hosed on syndications and now people don't like syndicators. It's
Right.
just a different deal structure. It works beautifully with creative finance. But I only do that on larger deals where it's appropriate for the number of people. That's pretty much the rules of the game. There's different structures you can use, but 99% of your deals are going to be 100% debt, a JV and a small partnership with the buyout, or it's going to be a syndication. Every syndication I've done, I have the exclusive rights to be the end buyer for the property. So I'll form a new LLC and take it out as a JV after it's run its paces and we've seasoned the deal.
Okay. So, people watching this, they're like, okay, that's great. You went from 2 to 38, but I don't know how to evaluate, or I don't know how to underwrite a deal. How did you learn to evaluate the assets that you're looking at to purchase?
Well, first thing I had to do is I had to eliminate all the like noise in analytics. If you try to research how to analyze a deal, you're going to
Right.
get an alphabet soup of, oh, you need to understand this, you need to understand this. It's like, what do I really need and what math matters there? I
Sure.
need cash flow, and I need to know that I can hold the property forever. My underwriting consists of this. How do I buy it, and how do I never lose it? I need to buy cash flow, and I need the deal to work without ever having to sell the deal. Doesn't mean I can't sell a deal if I want to, or 1031, or any of the other options, but the
Sure.
deal doesn't work just because I'm going to sell it in the future. I'm not a flipper, I'm an investor. So I have to be able to buy and hold. That's a really important part of buy and hold real estate. You have to be able to do both halves.
Right.
My prior mentor could have figured that out a little younger. So watching him, I was like, okay, if we can do both, we can become extremely wealthy in real estate because we can just hold and wait and wait and wait. And anyone who holds real estate for 20, 30 years, always happy they have. So that's the model that we went through underwriting. What matters? Day one cash flow. That matters. That is addition and subtraction. That is income minus expenses.
Right.
Net number there. You can, it's not the strongest indicator, but it's nice to look at your cash on cash return. I like to see that, on a deal with a ton of upside, as long as it's positive, I'm usually pretty happy as long as there's a path to get it high. But on a pretty standard deal, if we're cash flowing 8 to 10% cash on cash out of the gates, I'm pretty happy with that. That's a great metric. Another one you need to know, debt service coverage ratio, DSCR. That's a true cash flow metric. That's what banks lend on, and there's a great reason for it. That
Right.
is, after all incomes and expenses, how much money is left over to pay your mortgage and pay yourself. So 1.25 DSCR means I can pay all of my expenses, all of my operating. I can pay my mortgage, and I have a quarter of my mortgage left over to pay myself and another discretionary income. I try to keep that's my minimum acquisition is I'll buy around 1.25 DSCR. I
Right.
hold my portfolio at 1.5 or higher. So as I
That's
season them,
awesome.
I won't lever them below that point, which means I have strong cash flow. Half of what I pay, and I have, what am I now? $42 million of debt. With $42
Okay.
million of debt, I have a lot of mortgage payments. I pay myself roughly half of what I pay on all my mortgages. If you
Yeah.
guys are doing the math in your head, it's like, wait a second, you're paying interest on $42 million. Half of that is what you pay yourself. It's a lot of money. I've actually built a lot of cash flow doing this.
Sure.
That metric really matters. Outside of
Absolutely.
that, I don't care about the cap rate of a deal day one. I do care about the market cap rate because that's going to tell me roughly where I think future value is going to be. That's about what you need to know for math. You need to understand why the market cap rate is the market cap rate and how that valuation affects your deal.
Sure.
Need to understand your cash flow, and you need to understand your debt service coverage. If you have those three, there's a bunch of other fun numbers you can do for your own personal enjoyment. But if you're trying to build a portfolio, that's what matters. If you can do those three things, you can buy a ton of real estate before you get any deeper into the math.
So you mentioned about getting it from like a mom and pop in some cases, and I know when I evaluate my multifamily, I'm asking for T3, T12 rent roll. For some of these people, I mean, it's maybe an Excel spreadsheet, maybe if you're lucky. Have you had that kind of problem when you go to acquire an asset?
Yeah, I had a deal 12 plex where I got the P&L was written on the back of a plate, but we got a picture of the plate. We didn't even get to keep the plate.
Oh,
So I've seen no books. I've seen great books. If the books are lame, you have to know that market really well.
right.
So I'm going to do my analysis based on, okay, where am I going to get this deal? And I'm going to need to see bank statements to at least back up their handwritten numbers.
Sure.
The nice thing with those deals is seller financing is much more likely there because a bank's not going to lend on a paper plate.
Right.
However, I can buy on a paper plate if I can verify the income.
Sure.
And so I need to see leases, rent roll, bank statements. Yeah, I still need to do my due diligence, but I can absolutely go under contract on a paper plate. Also, I'm going to put down a heck of a lot less earnest money on that. So that's the type of stuff where I'm like, dude, you gave me a paper plate. We're going to put $500,000 of earnest money down and we're going to start DD. And so you can get into these deals with basically no money. Uh,
Right.
you can go through and your ability to negotiate the terms because a bank won't lend on it. It's assumed the only way you're going to buy it is you're going to mega lowball them and buy it with hard money, or they're going to seller finance. Those are the two ways deals like that sell. So when there's bad books, that's a common problem. That's the type of stuff that I'm best equipped to fix.
Gotcha. So you've been doing this for a long time and very experienced, and the topic of, or the name of the episode is Good, Bad, and Ugly. Can you share with us, a good story you had or a good experience you had in your investing, and then maybe one that was like, I wish I could do that all over again, or I learned a lot and I'm glad I had to go through it as much as I may have lost some money?
Yeah, I in a lot of podcasts I share the fact that I bought a resort and it was a bad idea, and that ended up ultimately it was a good deal. It's made money, but the way I structured it, I had to pay a million 150 earlier than I wanted to, which is really hard when you start with $0 and the first time you make $1 million, it disappears instantly. Um, when I first made a liquid $1 million in my portfolio, I held it for 13 hours. That is a little bit painful when you're starting your business, but I share that one too often. There was one that I don't share as often. It's the worst thing that can happen in real estate generally. Total loss of building and insurance didn't come through.
Oh,
So I
wow.
bought a hotel conversion. I have actually done a couple of these, and some of them have been ludicrously profitable. So you take a failing motel in a great area. These are
Right.
super location specific, but you have a failing motel in a awesome part of town, and it's like, okay, we're gonna do heavy reno. We're gonna have to turn around the branding of the building. There's a lot that goes into these. It's not just like we're gonna make a nice space and magically you'll fill it with people. It is a project to get these done. But I got a great price on it, 30 units, downtown core, Moses Lake, where I already had hundreds of units,
Right.
and I owned the PM company at the time. So I'm like, I can place tenants. I know rents here. This is a great location. I bought it for $1.6 million.
Okay.
That type of inventory there goes for about 110 a door, typically, if it's stabilized and done. So I'm looking at this being like, it's half price real estate. We're gonna have to do a lot of work here. That one went amazingly. Right down the street from it, I bought a 20 unit hotel conversion, even nicer building, $1 million price, so really great price, half price real estate again. Well, what ended up happening is we had the coldest winter that we had in Moses Lake in 57 years, and the pipes, which run under the roof line but too far on the exterior of the property, froze. I had 19 of 20 units have catastrophic water leaks.
Oh, wow.
Insurance had a clause because we were in the middle of transitioning it from hotel to multifamily.
Right.
There was a clause in there that said if your roof is over 20 years old and your pipes break specifically because of freezing, it is not covered in insurance. The exact
Oh
event
my goodness.
is covered now. So what you'd think you would learn is I need to check my insurance for this next time. What I
Right.
learned is this is consistent for all construction insurance everywhere. I was like, what did I do wrong? And every insurance agent I talked to, they were like, oh, you didn't do anything wrong. This is just the thing that can happen. I was like, what? That's terrible news. Uh, so we just finished the renovations too on almost the whole building. So
Oh,
all of my work lost, my ceilings fell in, the electric got fried all over the place. A
sure.
lot of the toilets physically exploded. The whole thing was destroyed. I ended up getting out of it with no financial damage. I bought it with a partner who specializes in hotels.
Okay.
He brought in the down payment, which was, I believe this one was 250,000. I think we did 25% down on this. He offered to just buy us out. He's like, "What? By buy us out, sign your equity over to me, and I'll handle the renovation." So I got into the deal for $0. 6 months later, I got out of it, not paying anything. He ended up doing the renovation. It cost him about another $200,000. He got it just appraised for 2.5 million. So he was in it for
Almost half a million.
1.35 at the end of
Right.
all things. He doubled the value of the investment, putting like he basically 4x'd his money. It worked for
Nice.
him fantastically. I was hosed though, way too early in my career. I'm like, dude, I don't have the money to fix this. So
Right.
it worked perfectly for everyone. The guy with all the money took the project the rest of the way, knocked it way, way out of the park. I got total loss of building with no insurance coverage with zero damage. It was a win-win, but what a gut punch when you call in insurance and they're like, "Oh yeah, no, we're exempt from that." It's like,
What do you mean?
did I just lose real estate? Are we out? 2 years in, are we just out? And turns out no. You can solve most problems in real estate, but that was the last time I think I've actually been stressed in real estate. I've had other catastrophic things happen.
Sure.
I don't feel the stress anymore. I was like, we got out of that. Stress didn't really help me in that one at all. It's helped me with the rest of my portfolio. The big takeaway was, you're going to have some massive successes in real estate. If you buy enough real estate,
Sure.
some of the liquidity events, they do end up being seven figures. One time for me, multiple seven figures, like it's millions and millions of dollars. Sometimes you have bad stuff happen and it is unbelievably expensive.
Sure.
As long as you play a pretty good game, and by pretty good, I mean you're very careful, you buy your deal with cash flow and margin, and you work on your insurance and you do the best you can, you typically come out way ahead. But the stress doesn't help you at all. So bad stuff happens. We just kind of go like, well, that is terrible. We're going to call our partners and let them know exactly what happened. Never hide that. I've seen that be done by other people.
Sure.
They're like, I'm going to fix it and it's all going to be good. I'm like, no, you're going to call your partners and tell them there's a problem so you don't blindside them 6 months later when your solution doesn't work.
Exactly.
You come in, you call everyone, you let everyone know what's going on, you give them a game plan, and you keep executing. And you keep doing that long enough, and you end up making a lot of money in real estate.
That's awesome. So you share with us everything that you do. What can somebody bring to you that brings value to you, or if they wanted to partner with you, how could they do that?
Someone wanted to partner with me. It's actually easiest. Funny enough, it's still easiest to reach me on Instagram at Christian Osgood. I'm on the back end of closing out our 76, which is arguably the best deal we've ever done. I expect it to be 13 and a half acres. It's they're all 3 and 4 bed units. It has a pool, a clubhouse, garage. I mean, it's absolutely beautiful property. I'll be doing another deal here a little bit later in the year in Waco for 86 units. So I'm always I like investing with people I know.
Sure.
But I'm always working on a project. If you want to invest in a piece of real estate, especially in Texas, feel free to reach out. Most of my deals, I usually have a minimum investment of 100,000. So if you're like, hey, I like the way that you operate, I want to get to know you better. The best way to do it is just reach out, because I always reach out to the people I know, like, and trust before I reach out to people I don't know at all. So
there you go.
yeah, get to know me. Reach out, let me know. Hey, I'm looking to invest. I heard you on a podcast. I like what I hear. I'd like to hop on a call and just get to know each other. That's a great starting point.
I appreciate that. And for somebody that wanted to bring like 100K to you, do they have to be accredited investors or just somebody who has the money?
It depends on how I want to structure. If I already have most of the money lined up within my network, but there's going to be more than 5 total investors in a deal, I'll
Right.
always do what we call a 506B, where I can bring up to 35% unaccredited.
Right.
So I do that more often than not. If it's a deal where I anticipate that we're going to have to do some marketing, I do accredited only, and I turn on the marketing machine, which I have. I do a lot of marketing, so I have a fantastic team who will get that word out to everyone in the country. So if you see an ad for me, it's going to be accredited investors. If you reach out to me on Instagram, we know each other. That's where you can start to work with me with unaccredited investors. But those are actually legally, specifically only people that I know. So I can't work with you if I don't know you. If you want to get to know me, reach out. Let's connect. Let's hop on a call. Let's talk about what you're trying to do and what we're working on.
That's awesome. I appreciate that. So, can you give me your Instagram handle? Is it just Christian underscore Osgood, or is it all one word?
I think it's just actually, I think it's just Christian Osgood.
Okay.
But yeah, just first name, last name. My name is unique enough where, yeah,
I,
I think I said Christian Osgood, and that's not true. It's just Christian Osgood. I'm Christian Osgood on Instagram. If you guys want to see more of what we do, Multifamily Strategy on YouTube. We finally, there it is. Finally crossed 100,000 subs. Love that channel. Thank you. That's how we got connected.
Yeah.
I share everything on that channel. So you want to learn more about how we operate, more about this creative finance stuff, check out the channel, and love to see you over there too.
And I can attest to that, guys. I mean, I've been watching him for a while now, and he goes and drops nuggets like throughout the whole time, just how he's doing it, what he's doing. That's why I had to have him. I asked him to come on because it's like I can't just keep this to myself. I got to share his experience, his knowledge with the people that are watching me, and give him a little bit more exposure. So, Christian, thank you so much, man, for taking the time to come out here, talking with everybody, sharing your story. And appreciate you, man. And I'm going to keep on watching you and learning from you. And God willing, I'm going to have the opportunity to do a deal with you.
Hey, well, I would absolutely love that. I'll make sure we exchange contact information right after this. And guys, I will see you all on next episode. Thanks for having me, man.
Later, fam.